Hello, everyone. This is Zak Gardezy. I'm the host of Money Minutes. I'm also the founder of Wealthstone Private Wealth Management and a certified financial planner. So, here on Money Minutes, I like to share with you some of the latest market headlines and my outlook for what's ahead. And so, for this week's episode, I'm going to cover, why is the stock market doing so well? It closed yesterday on July 2nd at nearly an all-time high in regards to the S&P 500. So I'll cover some key reasons as to why that is. I'll also share with you some insights into a couple stocks that I think are very important for the overall market, especially in regards to the whole artificial intelligence trend and what's shaping really much of the momentum around the market. So let's get right into it. So to kick things off, the stock market is doing incredible. It's had its ups and downs so far this year, but really if we look back at the year so far, the S&P 500 is up over 15% for the year, which, historically it returns around 10%. And so to be at, over 15% at around, really the halfway point for the year, it's a really good year for investors in the S&P 500 and really for much of the overall stock market. And so often, clients ask, I'm getting a lot of questions right now, what's going on? What's causing the stock market to do so well? So I'll point to a couple key reasons. Number one, the economic data that's come out recently has been quite positive, especially in regards to what's happening with inflation. So when we look at things like the CPI and PCE reports, which I've covered extensively on previous episodes of Money Minutes, the data is showing us that inflation is slowing down. And the labor market is staying quite resilient, although we've had some reports showing the labor market cooling and some showing the labor market is heating up a bit. And at first glance, that might seem a bit confusing, but that's actually pretty welcome news, especially in regards to the fact that if the labor market were to slow significantly, that could be horrible for the overall economy. Today's JOLTS report was quite positive in regards to the fact that the jobs openings were actually more than what was initially expected by Wall Street analysts. So as I mentioned, you mix in some cooling data with some heating data, and you get really some information that shows you the labor market is staying relatively strong. Chairman Powell in Portugal, along with some of his other central bank leaders, the European Central Bank president and the Brazilian Central Bank governor, also echoed some very similar themes around their economy staying relatively resilient. Chairman Powell talked about that, and that he's starting to feel a bit more confident in terms of cutting interest rates. He just needs to see a little bit more, but the recent data has been very positive and exactly what he's really looking for in regards to justifying a rate cut. Now, he didn't commit to cutting rates this year, especially didn't, answer one of the reporters' questions about committing to a September cut, but he seemed rather joyous in regards to the fact that inflation is finally starting to come down in a manner that he really wants it to. So some good news, and it's really why the stock market is doing so well as of late. So a couple stocks that I want to cover, specifically Tesla and Micron. So Tesla stock has been on an absolute tear. The stock is up over 60% from its lows in April, and there's a few key reasons for that. In April, when the stock started to take a tumble, it was because they missed their deliveries estimates. Well, today they reported that their deliveries were much better than what Wall Street was expecting. Additionally, the company has really turned some things around. Elon got his compensation package approved. They made some cost-cutting efforts, and they're starting to really focus on some interesting ways to get more sales, especially out of China, with a 0% financing offer. And so Tesla stock seems to be heading in the right direction. Micron, another really key stock for the overall market, a leader in memory storage, specifically high-speed memory, and high-speed memory is very important for artificial intelligence. They reported earnings last week, and they blew their numbers out of the water. Now, the stock did tank because they had some pretty negative forward guidance, but overall, their numbers looked fantastic. Now, Micron makes, as I mentioned, high-speed memory storage, and their storage is sold out for the rest of 2024 and for much of 2025. And so when you're analyzing the whole artificial intelligence momentum, which these memory storage, devices are integral with NVIDIA's H200 graphics units, which really power artificial intelligence, this data really gives you some of this momentum that we need heading into earnings season, that artificial intelligence is still what's driving the market. And we should see some pretty good numbers in some of the other stocks that are really part of the overall supply chain. And so positive news out of Micron. As I mentioned, their stock took a bit of a tumble after earnings because their guidance was negative, but I think it was really more of a case of, under promise and over deliver. And so this concludes this week's episode of Money Minutes. As always, if you have any questions, please don't hesitate to reach out. Thank you very much.